Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Sebastian, Chief Operating Officer at Option Pit, for a look into tech earnings just a couple of weeks around the corner. And of course, we'll also review trends in VOLQ, the Nasdaq Volatility Index. Mark, so you know what? It's earnings season already. We have the big banks reporting this week, but we are looking forward to the next couple of weeks when we see tech earnings start to hit the tape. What's going to be key in those reports to you?
Yeah, I think the guidance is going to be super important. A lot of people, we've already started to see a lot of tech names see their PE multiples contract. Now, the big thing people are worried about is what's going to happen to that EPS. Are they going to be able to continue to see earnings growth? If we start seeing some warnings on earnings growth, that could lead us to another leg down in the stock market as a whole, and take the Qs and the Nasdaq with it. I think Apple in particular is one to worry about. It's one of the few names that has not really taken it in the chin this year. And if they come out and are a little bearish, it could be a bloodbath for the overall market.
Yeah, I mean, when you think about earnings overall, we had second quarter earnings just past quarter, and that only reflected what we saw in Q1. What we're going to hear about over the next few weeks is really when inflation and talks of recession were taking place in Q2. So I think not only are what companies reporting, but to your point, what they say going forward, and it still seems as if we have very limited visibility when it comes into supply chain constraints, geopolitics, and if in fact we are in a recession or not. It's got to be really difficult for corporate management to be able to provide any sort of solid guidance.
Yeah, and the stuff about the recession is very interesting because, we did show job growth last month, but the question is where? And is it in high-paying jobs, or is it in, jobs that are less high-paying and jobs that pay well but are in blue collar? So there could be a real effect on maybe a tightly located job recession in some of the tech names. I think there's a lot of risk there. We've already seen companies like Tesla and Uber announced that they're going to be reducing workforce. And so there's a really interesting, I think, dichotomy between the U.S. economy and demand for service, hotel, construction, plumbers, electricians, and the potential for job retraction in high-tech names and in in the tech area as a whole. And that is where I think we're going to find out that we can have a recession and job growth still be relatively strong, which sets up. But again, I think the market still has a leg lower, and it's going to be because of these mega caps that exist within the Nasdaq.
Yeah, and if we take a look at the Nasdaq 100 Volatility Index, it seems as if volatility has subsided, certainly over the past week or two. Are there any clues that you can discern from how it's trading, what it will look like over the next month or two? How are traders positioning themselves?
Yeah, it's interesting. Yeah, VOLQ still relatively high, still over 30. But what's been interesting is that if one way of looking at volatility is how expensive not is just at the money, but out of the money options. And one of the indicators I use is to take the VXN, which is the Nasdaq, the Nasdaq 100 Volatility Index, and subtract VOLQ from it. VOLQ is very much an at-the-money volatility index, so it really tracks how much are people paying for calls right at where the Nasdaq is trading. VXN looks at the whole curve. So when I subtract VOLQ from VXN, gives me a really good insight into what's going on with curvature, with skew, with out-of-the-money puts and out-of-the-money calls. And it's been trending lower, meaning that out-of-the-money options are becoming far less expensive than they've been, meaning there's not really kind of the crash protection that we're looking for, even if VOLQ itself has been trending higher. So we're seeing at-the-money options see more demand and out-of-the-money options seeing less demand, which I think is interesting, and I think points to the fact that people ask, why is vol so low while the market's been selling off? That's exactly why. People are trading kind of at the money.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.